The global economic collapse is constantly evolving, with tariffs playing a significant role in shaping traditional trade dynamics, currency valuations, and financial markets. As governments impose tariffs to regulate imports, protect domestic industries, or retaliate in trade disputes, the ripple effects are felt across various asset classes, including cryptocurrencies like Bitcoin. Simultaneously, Bitcoin's decentralized and censorship resistant nature sets it apart from traditional financial systems, enabling it to operate beyond the reach of centralized control. Today, we're going to explore the impact of tariffs on Bitcoin and delve into how Bitcoin design allows it to escape all forms of censorship. Tariffs are taxes imposed by governments on imported goods, typically used to generate revenue, protect local industries, or influence geopolitical strategies. They increase the cost of imported products, which can lead to higher consumer prices, alter supply chains, and shift in global trade patterns. Historically, tariffs have been a tool for economic policy, as seen in events like US-China trade war initiated in 2024, where tariffs on billions of dollars worth of goods sparks debates about inflation, currency devaluation, and market volatility. The effects of tariffs extend beyond physical goods to financial market. When tariffs disrupt trade, they can weaken currencies, increase inflation, and prompt investors to seek alternative stores of value. Traditional assets like gold often benefits during such uncertainty, but in the digital age, Bitcoin has emerged as a compelling alternative. Its decentralized structure and finite supply makes it an attractive hedge against economic instability caused by tariff-induced disruptions. Now let's see how tariff influence Bitcoin. Currency devaluation and safe haven demand. Tariffs often lead to currency fluctuations as countries adjust to new trade realities. For instance, when US imposes tariffs on Chinese goods, the Chinese yuan may weaken due to reduced export demand. Similarly, retaliatory tariffs can pressure the US dollar. In such scenarios, investors often turn to assets that are not tied to any single currency or government. Bitcoin, with its global accessibility and independence from central banks, becomes a potential safe haven. During the US-China trade war, Bitcoin experienced price surges coinciding with the yuan devaluation. For example, in the year 2019, when tariffs escalated, Bitcoin prices climbed as Chinese investors reportedly sought to move capital into assets beyond government control. This trade highlights Bitcoin's appeal in regions facing currency instability due to trade policies. Tariffs can drive inflation by increase the cost of imported goods, which raises price for consumers. Central banks may respond by tightening monetary policy, but prolonged inflation erodes fiat currency value. Bitcoin fixed supply cap of 21 million coins positions it as a hedge against inflation, similar to gold. Unlike fiat currencies, which can be printed at will, Bitcoin scarcity ensures it retains value over time. Investors wary of tariff-induced inflation may allocate funds to Bitcoin, boosting its demand and price. Tariffs can also disrupt economies, prompting individuals and businesses to move capital to safer jurisdictions. Bitcoin facilitates cross-border transactions without reliance on banks or intermediaries, making it an ideal tool for capital flight. In countries with strict capital controls such as China, Bitcoin offers as a way to bypass restrictions. Tariffs that weaken local economies or currencies can accelerate this trend, driving Bitcoin adoptions as a means of preserving wealth. Financial markets often react unpredictable to tariff announcements, leading to volatility in stocks, bonds, and currencies. Cryptocurrencies, including bitcoins, are not immune to market sentiment, but their decentralized nature makes them less directly tied to trade policies. Speculators may view tariff related uncertainty as an opportunity to trade bitcoins, contributing to price swings. While this volatility can deter some investors, it underscores Bitcoin's role as a non-correlated asset that behaves independently of traditional markets. Beyond its economic implications, Bitcoin's ability to escape censorship is a defining feature that enhances its resilience in the face of tariff and other governmental interventions. Censorship resistance refers to Bitcoin's capacity to operate without being controlled, altered, or suppressed by any single entity, whether a government, corporation, or financial institution. This characteristic is rooted in decentralized design of the and cryptographic foundation, making it a powerful tool for financial freedom. Bitcoin operates on a global network of nodes, computers that validate transactions and maintain a blockchain ledger. No single authority controls this network, meaning no government can shut it down and manipulate its transactions, even in the face of tariffs or trade restrictions that limit financial flows. Bitcoin transactions continue unimpeded across borders. For example, during periods of heightened trade tensions, individuals in affected countries can use Bitcoin to transfer value without relying on censored banking systems. Bitcoin allows anyone with internet connection to send or receive funds without requiring approval from intermediaries. This permissionless nature ensures that no government can block transactions based on political or economic motives. In contrast, traditional finance systems are subject to sanctions, freezes, or restrictions. As seen between countries impose capital controls during trade disputes. Bitcoin's ability to bypass such measures make it a vital tool for preserving financial autonomy. Bitcoin blockchain is a public tamper-proof ledger that records every transaction. Once a transaction is confirmed, it cannot be altered or erased, ensuring transparency and security. This immutability protects Bitcoin from censorship attempts, as no entity can retroactively change the ledger to exclude or modify transactions. For individuals in tariff-affected economies, this guarantees that their wealth remains secure and accessible, regardless of external pressures. Bitcoin transactions are pseudonymous, meaning they are linked to wallet addresses rather than real-world identities. While not entirely anonymous, this feature provides a layer of privacy that shields users from surveillance or targeting. In regions where tariffs lead to economic crackdowns or capital controls, Bitcoin's pseudo-anonymity allows users to transact discreetly, avoiding government scrutiny. Bitcoin's borderless nature ensures that it can be used anywhere with internet access, making it immune to localized censorship. Tariffs may disrupt physical trade routes or banking system, but they cannot block blockchain and Bitcoin's digital infrastructure. This global reach empowers individuals to economically economically isolated regions to participate in global economy, reinforcing Bitcoin's role in censorship-resistant assets. While Bitcoin's censorship resistance and economic resilience are compelling, challenges remain. Regulatory crackdowns such as bans on cryptocurrency exchange or mining can hinder adoption in some regions. For instance, China's 2021 crypto ban disrupted local Bitcoin markets, though global trading continued unaffected. Additionally, Bitcoin's volatility can deter risk-averse investors during tariff-induced uncertainty. Scalability is another concern. Bitcoin's network can handle only a limited number of transactions per second, which may constrain capacity during surges in demand. Solutions like the Lightning Network aim to address this, but widespread adoption is still evolving. Finally, energy consumption in Bitcoin mining raises environmental concern, though innovations in sustainable energy minings are gaining traction. Tariffs reshape global economies, influencing currencies, inflation, and investor behavior. Bitcoin, in its decentralized and finite nature, emerges as a unique asset that thrives amid such disruptions. It serves as a hedge against currency devaluation or inflation, facilitates capital flight, and offers an alternative to volatile traditional markets. More importantly, Bitcoin's censorship resistance ensures it remains beyond the reach of centralized control, empowering users to transact freely in the face of trade barriers or government restrictions. As tariffs continue to shape economic policies, Bitcoin's role as a resilient, borderless, and censorship resistant asset will likely grow. Its ability to operate outside traditional systems position it as a safeguard for financial sovereignty, offering individuals and businesses a way to navigate the uncertainties of tariff driven world. Whether as a speculative investment or a tool of economic freedom, Bitcoin stands as a testament to the power of decentralized technology in an era of increasing global complexity.